Good afternoon. Welcome to Shop Talks, which is a production of Impressions Magazine, Impressions Show, and the In Kitchen. Check out inkitchen.com. Check out our YouTube channel. Got sponsors, Alphabroder, Stalls, Howard, Los Angeles Apparel, Hirsch, and Lane 7. They make it all possible to be free. We are really happy today to have Tyrone Gregory here, self-employed tax guy, doing a little business talk here. And I have Stan Banks, t-shirt side hustle guy that you've seen on YouTube, unless you're living under the ground. And we're going to talk a little bit about protecting your profits. And so, Tyrone, let's hear a little bit about what you do, and then we'll get into some protecting profits ideas.
Perfect. Well, first of all, thank you, Rick, for having me on the stage. I appreciate you and Stan having me here. My name is Tyrone Gregory, as Rick said. I'm also known as the self-employed tax guy. I am the CEO and founder of the Self-Employed Tax Company, where I assist small businesses with their tax preparations and become successfully self-employed. I'm an enrolled agent with the IRS, and I have been in this tax industry for a little over 14 years now doing this. So yes, it is my season now. So I'm excited, yes.
People must love you because it's the number one fear of businesses, the IRS, I think, right? And yet, despite that fear, it seems like a lot of people are not prepared to deal with the IRS in a proper fashion. You want to talk about a few of the things you do with your customers to make them deal with this, maybe from day one?
Really, as far as dealing with taxes, first let me say this to everybody listening. The IRS is not monsters. They are people just like you and I, right? That is the one thing, and I understand that, right? Because the IRS is the only entity that took down Al Capone, so a lot of people fear them for that reason, but please understand that they are human just like you and I. When it comes to me and dealing with taxes as small business owners, the biggest thing I want people to do is to be prepared. That is it. The unfortunate downside of what I see at the tax desk is that when you come sit down in front of me, what you've spent is already spent. It's too late. There's nothing we can go back, readjust. There's nothing we can go back and do. That time is gone, and now we have to deal with the consequences, unfortunately, which is why one of my main things, or my main talking point with my customers, is protecting your profits, because that is ultimately the most important aspect to your business. Like who in here, by raise of hand, started a business to go broke? Nobody raised their hand, right? But thinking of that concept, we all started business to make money, but unfortunately, when I sit at the tax desk, that's not happening. And there's a bunch of things that we can do to impact that, which is what I'm gonna talk about today. You know, and before I begin, normally, I have to say, I like being in a suit, right? I like to be professional, but this man here, the last time I did a talk, and I came in a suit, he talked about me.
You scared some people.
Yeah, so I'm here in my hoodie today. So yeah, I'm just saying.
Yeah, so just to add to it.
Wait, just on that, I would rather hire a guy with a suit than be a guy in a suit. So.
Yeah, so to add some context to it, like many of you guys, I started this business just going and learning, and next thing you know, you're making money and you don't know where the money's going. So Tyrone was a person who I met. He has a YouTube channel with a lot of educational videos, and I needed help at that point. So he was a person that came in and got me organized in a sense, so now I could prepare for where I was going, and I could see the money and I know where it was going, and kind of budgeting and trying to figure out what exactly I'm gonna do when it came to taxes. So a lot of people, when you start out, like, you're not thinking about it. Some of your jobs are all cash, is coming in and you're not paying attention, but trying to organize your hustle, and that's one of the things that we put together, is to organize your hustle so that you can know where your money's going. Even, one of the hardest things to do is to live off of the money you're making in this business, which a lot of us sometimes end up in that position. So, but even if you have to live off the business, you still got to know where the money's going. So sometimes that money coming in is already spent before it actually goes out. And that was one of the things where he came along and been a huge help to my audience just with the information he provides. as well. But he's really been able to help me and my business and my team take care of the revenue that we're bringing in from all angles. So it's really important. That's why he's pretty much here today.
So when people pay us, that's not profit?
You know what? I'm glad you said that, because when it comes to protecting your profits, one of the biggest things you can do is be aware, right? Understanding, yes, when people pay you, that is your gross profit, but there's something different that we need to be aware of, which is our net profits, right? Because there is two ways money can leave your bank account. Well, let me back up, because I don't want to make an assumption and assume that everybody knows what profit is. So let me say this. Your profit is whatever is left in the bank after the money leaves it. Does that make sense? Notice I didn't say after you spent the money, because your money can leave your bank in two ways, voluntary and involuntary. And that's what people fail to realize, is that involuntary aspect of running a business. So one of the biggest things you can do, Splinter, is definitely be aware. The first thing, and I brought my notes here, is taxes. Let's get into it. Paying taxes can help you protect your profit. And here's what I mean by this. How many of us here would like to pay zero taxes? So I got more people raise their hand this time than the first question. But think about what paying zero taxes mean. If your goal is to have profitability, if your goal is to keep more money in your bank account, what does a zero tax return really represent? Either
Cheating
you
or
lost money,
or you're cheating.
or we can talk about that later, right? You either lost money or you spent all your money. Or, like Rick says, if you cheated, right? But in either case, when it comes to taxes and people say, I want to pay a zero tax return, I encourage the opposite, me personally. For profitability purposes, your goal, like I said, let me say my goal. I don't want to put my goal on you. But my goal, even as a tax professional, as a business owner, I one day would like to have my tax bill say I owe $100,000. Does anybody know why? Exactly, because that means you made some money and I was profitable. Can you imagine how much money I would have to have made to have my tax bill be $100,000? Right? But most people are trying to get their tax bill down to $1 or zero. And there's a lot of people on the internet right now saying, oh, do this, do that. And I'm like, okay, but we're trying to be profitable. And I'm gonna give you one thing I want a lot of people to really be mindful of. When I say be aware when it comes to your profits. Let's take taxes again for an example. A lot of people say, buy a car, write it off in the first year, right? The biggest one is get a G-Wagon, get a Lamborghini, do all these things. You can Section 179 it, write it off in the first year, and you'll pay zero taxes. Now, I'll be honest with you. Granted, that is true. That is something you can do. But let me ask another question. That's the first year. How many of us plan on being profitable years after? Second year, third year, fourth year. And if you get this vehicle to zero out your tax return, granted, and I think I did this on one of my Instagrams, because somebody said that you could get a free car. And so I ran the numbers. You can go buy a G-Wagon for $200,000, right? You can write the whole thing off in the first year, which means you get a $200,000 credit on your tax return. But it's going to cost you $230,000 with taxes, interest, and fees, and you only get that deduction the first year. So, in order for it to make sense, I think when I ran the numbers, somebody who had, let's play it here, $200,000 in profit is what was left over, resulted in a $50,000 tax return. They spent $200,000 to get rid of 50. Does that make sense? But do you know how many people do that every single year? And so when it comes to me, that's my goal, is one, I try not to choke people out of the tax debt. You did what? Because again, it's already too late when you come see me and you're like, oh, this is what I did because I heard this on the internet. And I'm like, you realize you really just spent $230,000 to save 50 on 1 year. And then what about the next year? Because hopefully you're going to make more money. That means your taxes is going to be more than what it was this year. What you going to do? Go out and buy another G-Wagon? Get a fleet of vehicles? You know, we don't think like that. So the first thing that we must do when it comes to protecting our profits is be aware of everything that we do with our money. Right? So the two ways money leaves your account: voluntarily, involuntarily. Okay? Another thing.
You're also not getting any loans if you make no money, right? You're not getting any loans if you're showing no profit ever, right?
You know,
the bank does not like that.
Absolutely. And you know, and I know we saw this heavily at the tax desk during the pandemic, right? When the PPP, everybody wanted to qualify for the PPP and the EIDL, the grants, but they couldn't get it. They had nothing to show, no profitability, no paperwork, no income. So protecting your profits in your business is about being prepared. Like Stan mentioned, we're working on something to organize your hustle. Like, get organized. One of my favorite shows to watch is the Shark Tank. I love watching Shark Tank, watching the investors. And one of the things they ask people is, how are your books? Is your books in order? Because if your books aren't in order, I can't invest with you. I can't give you money. And if you are a startup and you're bootlegging and bootstrapping everything, having access to additional capital is critical. If you don't have access to that additional capital, if you don't have everything in order, there goes your profits. Because not having everything in order, one, think about it, everybody here is a vendor. Some of these people will give you a 30-day, 60-day, 90-day credit. But if you're not managing the cash flow and you can't pay them, you lose them as a vendor. You lose them as a vendor, you can no longer have inventory, you can no longer produce sales. There goes your profit. So that's definitely one of the things you got to do.
Is there softwares that you recommend for people who need to get organized in order to kind of like streamline that process?
Absolutely. So two things I'm going to tell y'all. It's the B word. A lot of people don't like the B word. Bookkeeping. And when it comes to, it's a shock. I was like, you need the bookkeeping. I'm telling you, technology has advanced so much today that you can get software. All you have to do is, let me say this. As long as you have a bank account for your business and a laptop, you can get organized. You can connect your bank account to software. I personally use Xero. That's the one I like. xero.com, but there's so many of them out there. QuickBooks, Self-Employed, FreshBooks, Waze, and they pretty much all do the same. The only difference is going to be the user interface, so whichever one you're comfortable with using. But if you have a bank account for your business, in which you should, and you connect it to that software, you can set it up as things are kind of automatically done for you. All you have to do is go in and make sure that everything matches and you're good to go. Absolutely. So like I say, for me, Xero, bookkeeping software, but even if you're not the software person, guess what still works? Pen and paper, Microsoft Excel, Google Docs. Anything that you can do to track your income and expenses is going to help you protect your profit. Because remember I said, money leaves your bank account two ways. When it comes to taxes, people leave so much money on the table because they're not tracking their expenses. And if you're paying more in taxes than you need to, that's opposite of protecting your profits. That's making your profits go down. See, a lot of us forget about the small little things, right? Like how many of us tracked our miles to get here? I saw that expression, like, ugh, I didn't even think about it. But do you realize that your mileage is one of the biggest expenses that you can have that's free? That helps you reduce your taxable income, which increases your bottom line, right? I don't know about y'all, but I paid $35 to park. First thing I thought about was like, that's going on my tax write-off. But how many of us will really just pay it and then throw the receipt somewhere? Like we get used to tracking the big purchases, the heat press machines, the inventory and things like that.
The small ones, if you just keep track, you don't even need the receipt, right? Is that right?
Good question, because receipts, a lot of people ask that, do I need to keep the receipts? As a tax professional, I say yes. Now, you don't have to bring every single receipt to the tax desk, right? Like when people walk in with shoe boxes and trash bags, Lord Jesus, we don't need to see everything, but substantiation is key. You keep it just in case, right? That's always, and like I say, technology today, folks, where if you have one of these, not a badge, but a cell phone, it's easy to keep track. Just take a picture. Take a picture, email it to yourself, put it into a folder. Me personally, on my computer every year, I have folders for every month, and I take pictures and put every receipt inside that folder. Absolutely. But with the bookkeeping software, again, I use Xero. I like Xero technology. You can put it on the app. You take the picture, it scans it, and it's
we're
in
going
your
to see
bookkeeping.
Xero up here next year, I guess.
Yeah. I'll make sure we talk to them, get them up here to sponsor this, because I'm talking about them a lot. And I'm not an affiliate. I'm not selling them. This is just what I use. This is just the system that works for me. Like I said, you're free to use any of them, but protect the profits. Another one, managing your cash flow. We talked about this, like a lot of people will get 30, 60, 90 days. Some of you may even have some of your customers on 30, 60, 90 days. Well, even though they got 90 days to pay you, you don't have 90 days to pay that bill. So how do you manage that? Right? Because one thing, like we just did that scenario, if you're not managing that, your credit, you go from good credit to bad credit. You go from having a lot of vendors being able to work with you to you finding it difficult to find vendors because they don't want to work with you because you don't pay your bills on time. Cash flow management is one of the key things to protecting your profit. And all of that can be done using the B word: bookkeeping, budgeting, making sure everything stays profitable.
So what are the other most common mistakes people make besides managing their cash flow?
I would say one of the biggest, not keeping track. A lot of people, and I don't know what it is about Up. People come at the tax desk, I ask them questions, how you doing? Fine, good, how was the year? Great. All right, how much did you make? Around this. How much did you spend? Around this. Like, that does not work. That is not good. That is the most common, biggest mistake. One, I'm gonna give you two reasons why. You're leaving money on the table. If you miss the minor things that you may not think about, there's money on the table. I talked to a teacher yesterday at my kid's school. She gave some money to somebody for something. And I was just me being a tax professional, being in a business, I was like, make sure you keep that and write that off as an unreimbursed employee expense. And she was like, oh, I didn't even think about that. But that's money spent. So if you track everything you spend and you're able to give that to your tax professional, yes, you may not know what to categorize it is, but we do. So tracking every single thing is going to help that. Another thing I see at the tax desk is even numbers. Fives and zeros. I'm telling y'all right now, stay away from fives and zeros. Anybody saw, like right now, Trump's tax return just got released to the public. You know what got Trump in trouble? He had even numbers on his tax return. That's what really triggered the IRS, because he had gave his kids some loans, right? And they was paying him interest on them loans, but he had interest of $18,000 evenly. And ain't no way interest is gonna be an even number. So one of the biggest things I see is people be like, yeah, they like to round off to the easiest number. That's an automatic red flag. So I feel like I'm telling people how to cheat. Because just stay away from zeros and fives, maybe put some ones, threes, nines, sevens, some fours on there. That's definitely one of the things I can see. I see most at the tax desk when it comes to business owners. We ought to talk? Yeah, because I can talk. We can go.
First, anything else you want to say, and then we'll do questions. How's that? Yeah, check out those
I
numbers.
think I'm with that, right? Run the numbers. One thing I like to say is never spend more than you get back. Does that make sense? Never spend more money than you'll get back. We know this as ROI, return on your investment. If you're going to spend money, make sure, say for example, if you know you're going to spend $100, you should know for a fact that you're going to get back at minimum 150, right? That's always, if you have that mentality, if you adapt that mindset, profits will be protected 100%. So never spend more than what you get back.
About a hand for Tyrone Gregory.
Appreciate it. Thank you.
Stan
Thank you.
Banks.